Welcome back for another Agix price prediction analysis video, and in this video I will be giving you areas that Agix needs to break above in the next coming hours, give you areas that you also need to continue holding above, and also share out my long-term Elliot wave analysis that I'm expecting to play out once the bull market is here. And at the time of this recording, Agix is holding below the 20-day MA here on the 4-hour chart, which is now acting as resistance for us to continue gearing up. And a break above the 20-day MA, once we flip it into support, there are high chances that we can continue gearing up and get above to the next key area of resistance at around the $0.26 mark. We are also trying to break above a significant area of resistance at around the $0.245 mark, and a break above that key area of resistance with a successful retest. Then I'm expecting Agix to get above the $0.26 mark in the next coming hours. We also need to have in mind that there are chances that we can get rejected at this key area of resistance, and in case such a movement plays out, then we can expect further pullback into an area that I will be discussing later in this video after sharing my long-term Elliot wave analysis that I'm expecting to play out once the bull market is here. And jumping to the daily chart, you can see that Agix gave us these lows down here at around the $0.05 mark back in 2022 before we saw this aggressive move to the upper side, giving us a high above the $0.67 mark, completing the formation of this Elliot wave count 1 to the upper side. And after seeing the formation of that first wave, we started a corrective structure in the formation of this wave 2 in a move that has managed to get into the minimum target area for the second wave, highlighted on the charts using this blue target area, which is an area that we have now fully maximized, and there are high chances that we have now bottomed out in the formation of this wave 2, and Agix is now ready for a massive pump to the upper side in the formation of that wave 3, and the minimum target areas for the third wave can be given by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave, giving me a minimum target area at the fib level 1.618, and that is above the $1.16674 mark, and that is the minimum that we can expect Agix to do in the formation of that wave 3 before we can expect a wave 4, and then continue getting even more impulsive in the formation of that wave 5. And getting back to the 4-hour chart to give you pullback target areas that we can expect to play out in case Agix does not see a successful break above significant areas of resistances. You can see that on the 4-hour chart on the 18th of October, we got a low at around the $0.15725 mark before we peaked to the upper side, breaking above resistances in a move that has now given us a high above the $0.26 mark in what we can now term as the formation of a larger Elliot wave count 1. And after seeing the formation of this first wave, whatever we expect next is a corrective structure in the formation of this wave 2. And once we have a low in place for the second wave, we can continue expecting higher prices in the formation of that wave 3, then expect a wave 4 and then a wave 5 to the upper side. And in case we get a pullback over here or maybe get rejected at key areas of resistances, then that will be suggesting that we are now seeing a corrective structure in the formation of this wave 2, and the minimum target areas for the second wave can be given by connecting the Fibonacci's from the low of the first wave to the high of that wave 1, giving me a minimum pullback target area between the fib level 0.382 and the fib level 0.618, and that is between the $0.22167 mark and the $748 mark, the area that I have highlighted on the chart using this blue target area. And this is the area within which I can expect that pullback to get us into, find support and give us a reversal to the upper side. And the worst case scenario can only play out in case we see a break out of this blue target area to the lower side, because that will be giving us a more bearish scenario that can easily give us a reset of the loss that we made at around the $0.15 mark. Alternatively, in case we see a break above resistance and continue gearing up, then that will be suggesting that we have one more high to make in the formation of this wave 1 before we can see a pullback in the formation of this wave 2. That is the alternative scenario that we need to have in mind in case we see a break above resistances and a break above the $0.26 mark. And that is what I'm keeping my eyes on the AGIX chart, on the short term and also on the long term. And I hope that video was of much help to you, and I hope to catch you in the next one.